Hey traders, this is Christian from Hertz Tribeca Trade Group with your week ahead video for Sunday. It's Sunday night. NFL playoffs for the weekend just concluded with the Green Bay Packers beating out the New York Giants. So unfortunately, my Giants kind of took it on the chin this game, but very happy to see them in the playoffs and at least a good first half anyway. Okay, so looking forward to this week. What do we have in terms of events? Something for everybody. I would say we've got a lot of speeches. We've got Janet Yellen, Obama, Trump, Merkel. We've got various Fed officials that are speaking, and then we start, which I think is the most important for the week, is we start with earnings, and the week is backloaded in terms of the financials. We've got J.P. Morgan, BlackRock, PNC, Wells Fargo. They all report towards the end of the week, mostly on Friday. We've got the J.P. Morgan Healthcare Conference, so a lot of the biotech and healthcare companies will be in the spotlight this week. We've also got a couple other conferences. We've got monthly sales figures from a lot of the airlines. U.S. economics are a bit light this week. I would say out of the group, retail sales probably one of the most important reports out of the week. And then moving on to my market view, and I've been, I would say, neutral for the last 3 weeks. If you watched last week's video, not a lot of bullish or bearish signals in the U.S. Major indices last week, but things started to tick up towards the end of last week. So I'm going to get into each one of those in just a second. But what I want to stress is a couple things here. So while the technicals I think are improving, one thing that scares me a little bit is the VIX. The VIX is all the way back down to 1132. When this happens, it's a great time to buy a little bit of volatility, maybe buy a little bit of protection if you've got a longer view portfolio, or I should say, if you're pretty much long the market, protection for insurance against a little bit of volatility is very cheap right now. And so that's the one thing that scares me a little bit with the market is that the VIX is all the way back down to 1132. Something else to watch, which I think is also going to be very important, is as I mentioned in the beginning of the video, is earnings. Why is this going to be important? Because a lot of stocks have already made a nice run. Now they're going to need to back it up with their earnings report. So I think for the most part, those are going to have to be strong. Some names that have actually not partaken into the rally, maybe they can continue to have so-so economics and they'll be okay. But I think for the groups that have really run a bit, that's really going to be interesting to see whether or not. So I think this is going to be one of the most interesting quarters for earnings that we've seen in a long time. Then just a couple other points to stress. If you're an option trader, yeah, this is one of my least favorite times of the year. It's if you're paying attention to option flow, which I generally look at aggressive call activity, aggressive put activity, and this gets a little bit noisy around times of earnings for option activity. So you always have to keep in mind, when someone is putting up option, what expiration it is. Will it cover their earnings report? That's going to be the next couple of weeks. So that's something to keep in mind. And then also, just another point to make is a lot of companies that have big buyback plans. A lot of those buyback plans are going to be turned off. So, there's quiet periods right before earnings, right before after earnings per name. So, companies won't have as much as buying support around that time frame. So something to keep an eye on. So jumping into the technicals for the week. A couple of things that I'm looking at the daily chart. Last week's newsletter, I went over the weekly chart just to look at the overall trend and to look at the New Year's the value area for the new year. I want to talk about daily charts and all the major indices. S&P, it's made some progress here. It started the year right in the middle of the value area, and you could see it's pushing to the top right now. So in SPY, I would watch 227.75. That's a resistance level. And if we do break, I think that'll coincide with an MACD crossover, which is, MACD crossovers are great for trend changes, for swing trading. So that hasn't happened yet, but that's something to watch next week, as well as that 227 resistance level. Support, always want to give that level as well. That's 223.88. Another thing to notice here is that, as the S&P has been in a nice uptrend, of course, since the election, notice that we haven't gotten a bearish crossover here. So, it's been now a couple times the yellow line is the 5-period exponential moving average. The blue line is the 20. Notice that the last time these crunched, it was a nice move up. We got that as well right at the end of the year. So no bearish crossover there. Nasdaq, I think, is the most interesting out of the three sectors this week. You had some real, like I said, you had some really nice outperformance. We broke 121.26. Also on the weekly value area, just to kind of show you where I'm looking at this as well. We also got to close above value on that yearly time frame, yearly value area as well. So pretty good looking here in terms of what the cues look like from a technical basis. Also, you can see that they did have that MACD crossover that has not happened yet on the SPYs, but you got one for the cues. So nice trend change here and new highs. By the way, new high for SPY as well on Friday. IWM a little bit less of a signal, which is fine. You know, we've been moving sideways here for about 3 weeks now after a nice move up here, and two levels to watch. Basically, 138 in IWM, as well as the downside right around 134. So watch these two levels. I still think IWM continues to go in a nice upward trend here, but you know, of course, I'm going to let the technicals provide that signal and not just you know, not just taking an outright view. So that being said, 138 is a level that I'm watching for in small caps. So next, after looking at those charts, I always like to look to see, take a look under the hood of the S&P, take a look at all the sectors, what they're providing, what they're showing is their good breadth, or a lot of the sectors showing strong performance? Are they in an uptrend? And sure enough, and they've been this way basically since the election. We've seen a lot more sectors above the 50-day moving average. That's what I kind of look at for a strong trend. When you're above the 50, the 100, and 200 day, you know, it's a pretty good sign. Next, I want to know, you know, once I establish that, then the next level to kind of peel off is whether or not there's momentum. So we do have an indicator, TTG proprietary indicator that looks at that, and you could see one of the reasons why I've been neutral for the last couple of weeks is because on that momentum indicator, we've either seen negative ratings or falling ratings. You jump ahead to this week and what those indicators are flashing now, and a lot more positives. Financials, energy, industrials, materials, they all have rising momentum to them right now. And a couple of the other sectors like tech, consumer discretionary, while not rising, they've got strong ratings. These ratings go from a negative 12 to a positive 12. So you could see of the 7 sectors in green here that are above the 50-day moving average, a lot of them look pretty good right now. In terms of sectors, you could see healthcare actually jumped up from being, you know, below the 50, the 100, and the 200-day moving average, now jumping back above the 50-day moving average. So some nice momentum that we saw. Healthcare was actually the best performing sector last week. Actually, biotech was up about close to 5%. Just looking at the biotech sector, you know, I do think it looks a bit interesting. If we look at IBB, you know, these basically look the same. IBB and XBI, the two biotech ETF sector ETFs that I look at, very similar looking. They're now right above, you know, after some nice sideways action, pretty, and some volatile swings here back and forth from a sideways pattern. You know, looks like it's you know, above these moving averages. You know, I think you could try along in this environment, and then you've got your stop price. So you can, you know, if we zoom out and look at the 2 year, you could see that we've been moving sideways now for basically about a year, or close to a year here in biotech. So an underperforming sector, but you know, I think after a long base here, it definitely has a chance here. You know, I think we're going to see more volatility with what happens in the next couple of months, with possibly a new, you know, I think Obama, the healthcare program is going to be repealed, but we'll see what comes forward from there. But I think you're going to still see some volatility when they start to talk about pricing. But nevertheless, that was the best performing sector. You know, interesting, if you look at the best performing groups in international, the Greek ETF, this is something that I've been sending out a lot of charts at. The Greek ETF, you know, looks pretty good to me. Let's just bring this in here. Around the same time frame. So you can see it's been basing here for a long time. And if we go to the 1 year, You can see also above the 50, the 100, and the 200-day moving average here. So I think again worth a shot here from something that's been moving sideways for a long time. Now is above these moving averages and looks interesting to me. And this is the case with a lot of international ETFs. I've been looking at EWA, which I'm actually long EWA. Same thing. After a big base here and a previous high, these things could get back to, you look at EWA, it was once about a $28 stock. It's $21. So, I see a lot of possible upside. And you have your defined stops. If these things start to go below these moving averages, good place to get out. And if that happens, you probably have a small loss on your hands. But I think the risk to reward sets up very nicely for these groups. I'm going to talk about a couple more of these in just a second. ETF flows for the week. Another reason why I'm not following along with what I hear a lot of CNBC and commentators on Bloomberg talking about, the buy the election, sell the inauguration. I don't see that right now. There's still a lot of money that's being put to work for equity ETFs. $12.4 billion dollars being added. So, this is something that I monitor every day. As long as there's still more money being allocated to equity ETFs, it tells me that there's buyers of equities out there right now. Last week, REITs, financials, healthcare, industrials, consumer discretionary, and consumer staples, all strong inflows. Healthcare, interesting that I just was talking about IBB and XBI, $452 million of inflows. Not too bad. And then again, where I've been really focused the last couple of weeks is international ETFs, $2.4 billion dollars of inflows last week. Developed international markets continue to see inflows. They added another $1.6 billion dollars of inflows, and that's much more than emerging market ETFs, which had $650 billion dollars, but excuse me, $650 million dollars of inflows. And so this is really where I've been, looking at these charts: VEA, IEFA, EFA. EFG. These are all international developed market ETFs, which is essentially fancy for just basically Europe and Japan. And you look at a couple of these charts. I could look at this in terms of the value areas. We could look at EFA or VFA, VEA. They're very similar looking, but more charts that have been consolidating for a while and above the daily value area now, and I think a nice shot to possibly go long these against, again, defined support, defined stops, which is the 200-day moving average, which is the white line on my chart. So I very much like this area. These international groups, developed markets, I think have some upside ahead of them. Japan ETFs, been talking about this for the last few weeks, but 8 straight weeks, quietly putting together 8 straight weeks of inflows. Not a lot of people are talking about that. I think it's very interesting. Okay, so I want to get into a couple other charts, and then I want to talk about option flow, the biggest and most interesting option trades from last week. First thing I want to talk about before we do that is, a couple other areas that I'm looking at. We're going to have the FANGs stocks did really well last week. Facebook, Amazon, Netflix, and Google. Looking at these as what they look like as a group, very interesting to me. And also with these names that are going to be reporting earnings in the next couple of weeks, if you don't want that earnings risk in individual names, you could play the ETF and have a little bit less risk than, like I said, in case one of those names happens to bomb for earnings. The whole group is breaking out here, so new high on Friday, nicely above the 200-day moving average. Pretty good looking chart. And again, FDN, the FANG stocks make up 35% of this particular ETF. They're the largest. Those 4 stocks are the top weightings by far. If we pull this up on Bloomberg and look at the top holders, or top weights, I should say, you can see Facebook, Amazon, Netflix, Google twice. So Google is actually 10% of the ETF. But you put these together, it's 35% of the ETF of the Dow Jones Internet Fund. So a nice, easy way to play the whole group rather than playing them individually as we go into earnings. So that's a chart that I like. A couple other names. EFV, I've talked about international developed markets. This is international developed value. So, a nice breakout here. You've got a buy signal on my charts using our proprietary indicator. and you've got your defined support here right at this right at this red line. So you could play a move above here as long as it continues with this trend. Also, you've got an MACD crossover too, indicating a trend change there. Next, not an ETF that people are looking at, but this ETF actually saw some buying on Friday. This is the Philippines ETF. Better play, obviously, to do in cash rather than options, but this was one of the top performers in international country-specific ETFs, up 6.3% last week. And take a look. This has been one of those areas of the market that has been in a has been in a downtrend, but notice it's breaking out of the downtrend here. So $40 was the recent high, all the way down at the stocks right now $34. So another one of those names that you could play to try to get back to try to further retrace some of that move of the downtrend that it saw months past. Next, again, I'm kind of telling the same story, but this is VGK. This is the European ETF. Again, just over the 200-day moving average here. I think something's going on here. Notice all these purple lines up here. These are called VPOCs, version pointed controls. This is, when the price moves very quickly in one direction. Sometimes we leave these point of controls that the price never touches. Why is this important? Because often once price starts moving, price seems to want to gravitate to these VPOCs towards these version pointed controls. So we got a lot of them up here, and I see a lot of upside that could take place for the European ETF VGK. So first area of the market that saw a lot of call buying. This was on Friday. We saw heavy call buying both in the March 16.5 calls as well as the July 19.5 strike calls. So SLV. And we've seen this a couple times now. TLT, we saw a lot of call buying a couple weeks ago. TLT ended up being a really nice option trade for the room last week. And this chart is not very appealing to me at all. But if someone is going to buy that many of SLV calls, I think it's too many not to participate a little bit. And here's the actual trades that went up. Again, these all went up very aggressively. A lot of these were sweep opening trades, indicating that somebody was aggressively buying these calls. So what I would be looking at here, if you didn't get into this trade, 1598, we get above this level, and that's out of the downtrend that it's been in. So that's what I would be watching. So I did get involved in this trade on Friday, but if we stall at that level, maybe I take that trade off for scratch if we don't get above 1598. Next, a couple individual names that caught my attention last week. Alibaba. Alibaba, there really hasn't much that's been going on here. Very, absent call buying in the last couple months, but we started to see a little bit of call buying, in the beginning of last week. And a couple of things here to notice in the technicals. It's been in a downtrend, but notice it's poking its head above this downtrend line here. It's still, it is above the 200-day moving average, but and also now it looks like above the 50. Just needs to get above the 100-day moving average. Then I would get a little bit more interested. But I think definitely a day trading candidate, especially with the move that happened in Amazon towards the end of last week. Next, this was really interesting. We saw this a couple times last week. Some really large call activity in Micron. One particular trade, there was February, there was March, and then what kind of really caught my attention is this big trade that happened in January. And a lot of times when I'm looking to swing trade individual names, if somebody puts a really big chip down, either several, at least a quarter out, but even further going out to basically a year from now. And when somebody puts down one of these what I call them as big chips down, they're laying down $1.1 million in premium. Someone has a pretty strong feeling about the stock. Then, as always, if it lines up technically, that's usually when I like to enter a trade. So, looking at the Micron chart here, and I kind of scaled back here a little bit longer term. just to kind of see where the stock has been because it had such a nice run in 2016, up 65%. However, if you look at where the stock was, it was, it made a high of $36. It still has a long way to go, so still a lot of upside to look at here. And you've got again your defined support here, so you could be long against that red line that I've got right here on my charts, which is right around a little bit under $22. So there's your defined support, and I think it's definitely worthy of a shot, considering all that aggressive option activity that we saw last week. In particular, I do like the January 27 call is exactly what paper went after. Okay, so a couple other things to look at. So those are some charts. Like I said, I wanted to talk about the aggressive size option activity that we saw last week. And what I've got highlighted here is a few trades that happened Tuesday, Wednesday, Thursday, Friday. If you remember, Monday was a holiday. So these are some of the trades that I looked at last week. And again, I'm not looking at, January or February expiration. I'm going out further than that. So these are trades, they at least have to be out March or further, where someone is laying down a decent sized trade. So I just want to go over these quickly, and I'm going to bring up each chart and go over the technicals and why I think it's interesting. So the first one that we saw was MBI. This is another one of those, on the fringe type financial companies, which we've started to see a lot more option activity, and not your big banks, but some other financial companies. So MBI, what I'm watching for this one, I did not enter into the trade last week for this one. As I mentioned in the trading room, I'm watching 1126. So I've got an alert out there. If we get above 1126, I will possibly be getting into these August, and again, all the way out to August. So, plenty of time for this one. And I'd rather be a little bit, I say this a lot, I'd rather be a little bit late than early and wrong. So I've got that alert out there. I do think it's a very interesting trade, and I'll be patient and wait till we see that breakout of the next level. On Wednesday, two trades that really caught my attention. BX, this is one that we've continuously seen call activity in. I am still long. I was long some March calls. I did roll them out to January calls, but this is one of those stocks. Looking at the daily chart, firing off another buy signal here. Again, another one of those. I'm kind of showing a lot of the same type of charts where you've got nice defined support, and your levels are defined for you. So it did break out last week. $30. Yeah, I think you can remain long the Blackstone Group above $30. You could set your support if it breaks below 30. That would be my exit, where I would take profits in Blackstone. But this is Blackstone is something that they've been going after. When I say they, institutional investors have been going after the last couple of weeks. I would actually say over a month it's been now. But this was last week's activity, and always to me one of the most interesting thing is when we see repetitive activity, aggressive call buying. So certainly we saw that one. These March calls, you can see the open interest on these. It's actually pretty interesting. 63,000 contracts. So you could see that was an add to that position. So like I said, repetitive call buying, almost 64,000 contracts. So again, a very big chip someone's putting down. So, like I said, I'm long that one, and we've got some defined support. I think I actually duplicated this one, so I can actually knock this one out. INFY, another one where we saw both Thursday and Friday some call buying in this one. These are April 15 calls. So again, too much. I did enter into this trade. It's just too much activity for me not to get involved. And looking at the charts, again, I would want to see a break above 15, but this was too tempting to me. And even if it does get above 15, I may actually add to the position a little bit. But again, another one of those charts where, showing some signs of life here. It's this I would consider a counter trend trade. Look at the 200-day moving average; it's all the way up here. But you could see, if this thing does have a nice counter trend rally, it's got a ways to get to the 200-day moving average, which will act as resistance. So we're looking at 1482. and a move to the 200-day moving average is almost $2 straight up. So I think this was worthy of a shot, considering how much call activity we saw in this name. Another trade that we saw was Disney last week. This actually, we saw a couple different trades in Disney. So this was also falls into the category of repeat call buying. But Disney has been just on a super run here, but it looks like an investor is looking for further upside. No position in this one for me, but again, I talked about VPOX and a couple other charts, but you got a couple of them up here. The recent high 122.08, and you got a long way to get up there. So I think definitely an interesting setup for Disney. Again, no position right now in this one for me, but will remain on the radar. And then Friday, I actually have four different trades. We talked about SLV. We talked about Micron, a couple other trades. Weatherford, we've seen call buying the last couple weeks in Weatherford. Weatherford, I've already actually hit three targets in this one. Take a look. It's rallied all the way up to the 200-day moving average. So now is really the big test for it. Notice the nice buy signal here. So nice buy signal here, and we'll see if we get a little bit further continuation above the 200-day moving average. But I really like the fact that they've been in buying these calls now a couple different times in WFT. These are the March calls. And then the last one, this was a trade that we saw. This is a trade that's worked. This is a name that's worked pretty well on option activity. This is NRG. This is a utility name. Taking a look at this chart, this is a trade that I'm looking for next week. I did not put this trade on last week, but another stock with a buy signal on the Raptor indicator, plus 11 and rising, define support right at 1292. So another name that I may look to enter into in the beginning of the week. Maybe we get a retest back to 1292, and that would be a great area to get long these calls. All right, so that is it for the weekly rundown. If you want to be a member of Tribeca Trade Group, we have a special right now, half off the first month. You can go to tribecatradegroup.com to get involved. So thank you very much for watching the video, and have a great week of trading. Thank you.